and welcome to Trading Growth and Value Stocks. My name is James Boyd. Good to be back with you. I was on the East Coast in Louisville over the last couple of days. Great to be back with you. And we like to also just make mention, we got BJ with us, Andrew here, Jim, Greg, Jay Richardson, Lena, and many others. The Fed's Jerome Powell is still talking. I can see him here. We will kind of take a look at how the market has fared. What was the expectation going into today? Kind of what would be victory at the end of the day, given the Fed has already pretty much told the market, or investors have forecasted what they thought the Fed was going to do. So we'll kind of talk about some of the areas that kind of actually shown better through that Fed day here so far. So just real quick, as we get started, you can follow me on X. I do post educational content, do post a couple photos, etc. on my X handle. Check that out. Also post announcements as well. So just real quick, so follow me there. Now, also want to give us a quick reminder that with what we discuss here today, it's done for general informational purposes only, should not be considered individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. So you need to understand something. Some of the examples we talk about, you might say, I wouldn't do that. That's fine, okay? So other people might. And so we know that we kind of all have kind of a different investor sentiment, and you get to pick what you want to do. Remember that Schwab does not recommend the use of technical analysis as a sole means of research. And also remember, when we talk about examples, we will do that in the Paper Money software application. And when we talk about investing involves risk. Now, with that risk, there wouldn't be any potential reward unless there would be some risk, okay, to it. Now, as we get started here, we'll talk about kind of how the markets have fared. I'll talk about maybe what some investors have been watching for the last couple of days, and kind of talk about some of the things that we're seeing, some up, some down, and we're going to talk about putting on some new positions here today. Now, if we don't see setups, okay, this is very important we understand this. If we don't see setups, the Paper Money account will not take trades, okay? If it doesn't like the setups, it will set an alert. If the Paper Money account doesn't actually like the setup, it will set a buy stop. It's very important to understand when you do not see the setup per your rule set, the investor is kind of standing down, if you will, and waiting for that setup. And that's okay, because the investor is trading the rule set. Now, if we take a look at this just real quick. So remember, going into today, now remember, many investors talk about the probability of rate cuts given the FOMC meeting. I think it was like 99%. They were expecting a 25 basis point cut, or a 0.25%. Okay, now remember, the market trades to that expectation. So you got to remember, they're going to, if they think that's a positive, they buy the market or some individual stocks prior to them confirming that. That's just how it works. It's called discounting. Now, if you take a look at this and kind of see what we have, so today, now you got to imagine something like on the news day, does volatility tend to be narrower? On the news day, does it tend to be wider? I think we'd probably say on the news day, like Fed day, earnings, etc., we'd probably say that the range should probably be a little wider. Now, the range here today, if we look at that, at 574, so it really moved, the Dow Jones really moved 1%. Oh, no. Now, what would be victory here? Well, the victory is actually the support is still intact. Victory would just be that we close higher, given that investors already forecasted that they were going to cut rates anyway. So if you look at this, now if you go back to the high, I'm sure many investors would say, geez, I wish we were at the high. We're not. We are trying to. Now, Fed's Jerome Powell is still talking. It's amazing, okay? Like how much can he say? Anyways, he's answering questions. So, fair. Now, if you take a look at this, not quite a hold yet, but trying to fire back on the Dow. Where we did actually, now, by the way, that was a brand new high here today. Brand new high intraday is not negative, okay? Again, though, would like to see it close higher than where it opened. Where we did see a little action here today is the Russell, and this kind of goes back to not everything in someone's portfolio. I haven't touched these lines, okay? So number one is, if we look at the lines that we've actually been drawing over time, we went to the top of the line. Some short-term traders took a little profit, 24.50, and we're sitting here at 24.13. We fell back about 1.5%, but we're still kind of grinding in this channel. So still above the diagonal support level. Moving averages are still green. You're going to also see that we kind of correspond with where we were previously. So there was a little diagonal touching and horizontal on the Russell 2000, which are very sensitive to where interest rates are. Now, if we take a look at the NASDAQ didn't make an intraday high. It has been more volatile with NVIDIA actually having some news overnight from China. Now, you take a look at the S&P, you pull that up, and that kind of looks very much really like the NASDAQ. So the S&P, okay, now, by the way, that movement in the Russell, on the S&P 500, that moved maybe like about 1.1%. So not really a big move, if you will. It wasn't, okay? Moved 70 points top to bottom, 73 points on 6,600. You're at like 1.1%. So even though it feels like it's fluctuated, it's about what you would expect with news. What does that mean? Well, when you go into news, investors trade to the expectation. Some investors sell prior to the announcement because they're trying to take what the market has given them. Second, allow the news to be released and then let the market reset. Okay. Now, while I was gone, one of the charts I kept watching a little bit was the VIX. Did anybody else watch this chart over the last couple of days? Now, we know as investors, when this chart is going up, and we don't care if just the 10-period moving average is going up. If that 10-period moving average is green, that 10-period moving average on that day was green. On this period, the moving average was green. This is where some investors say, look, I'm going to adjust my stops, review my stops. I might change the strategy a little bit from stock to something else. And they might, for example, just say, hey, I got to probably plan for maybe some flagging back and or consolidation. So far, it's good to see that really after the news, he's still talking, that we actually have kind of the volatility going down and not expanding, okay? So coming into today, there was a little anxiety building of what the Fed was actually going to say. And also not what they were just going to say, what was the forecast or what is the forecast going forward. So just real quick, any questions, okay? So Jim asked the question, what do the tails each say? To me, the tails or the wicks, the lower shadows, upper shadows, etc., is just showing you volatility. Okay. Now, if you have an upper shadow, like we actually saw in Russell, just real quick, okay? If you actually saw an upper shadow, like on the Russell, like that, what does it probably tell us? And again, I did not redraw this line before we came to this class. What it actually tells me is somebody was really watching out for the target, okay? And they knew exactly where that target was, diagonal, horizontal, and someone actually set some targets. Now, this is where you can't get mad at other technicians. They drew the lines and they held to their stance of where they want to sell. This is where the intermediate long-term trader follows their path and the shorter-term trader got in out, okay? All right, now, let's kind of talk about just real quick, I thought was a little interesting. If we pulled up, let's say that let's go DXY if I can. Now, where it got a little interesting so far today, before Fed Jerome Powell spoke, we saw the U.S. dollar go down again. Well, if the U.S. dollar actually goes down, what goes up? Now, remember, you got to think teeter-totter here, okay? Now, remember, you don't have to have a PhD in economics, okay? If one currency goes down, what goes up? Well, you could actually have some commodities go up. It might be oil, silver, gold, and so on, copper. Okay, if we're talking about currency, it could be Swiss franc, pound, Canadian dollar, Australian dollar, euro, okay, Canadian, and so really kind of seeing the U.S. cut rates when those other countries might not be cutting rates, still seeing the U.S. dollar have some weakness. That would still probably tell us that there could be some movements in commodities, okay, and we're going to talk about that here today. Now, if we said, okay, from the U.S. dollar going down, how is, and from them cutting and talking about in the future cutting again, what sectors have actually held up a little stronger here today? Now remember, think teeter-totter, right? If the U.S. dollar actually goes down, what tends to go up? Now, by the way, the euro actually hit a brand new high here today, over 120. Swiss franc was not low, okay? And so we saw those other currencies get a little push as the US dollar weaker. Now, I want to bring up just one place, just real quick, since we're on that theme of commodities. Now, obviously, there's two baskets, right? Energy and basic materials. Now, I'll pull up basic materials just real quick because we kind of talked about this, watching to see if this could break above the 980 level. It has not yet, as far as the sector. If we actually take a look at the other commodity sector, is energy, this is a question for you, is energy maybe starting to kind of get a little push here? Now, if we zoom in for just a moment, okay, most of the touches horizontally, they were right around 900. And then recently, you did not see it come down to the 900. It went down to the 911 area, about right there. And then if you look at what happened just recently again, we did not fall down to the 911, that previous horizontal line below that, we fell down to the 922. Now, this really begs the question. Like, why isn't it pulling? Why are these higher lows? That's a direct question. Are these higher lows? Yes or no? Now, if we're making higher lows relative to that, if we're making a higher low right there relative to this and this, you got higher lows. If you're actually making higher lows into the area of horizontal resistance, this really kind of tells us something about, hey, we could be starting to really make like an ascending triangle. Now, option number one, nobody ever said someone had to buy an energy stock. What could they do? Do they have to buy an energy stock? No. Could they consider buying the basket of energy stocks? Oh, they could, okay, if they wanted to, at least evaluate if they wanted to. Could they buy an industry group in the energy space? Wonder if I don't know what that is. Well, if we go to real quick where it says scan, we're going to go to Stock Hacker. Nice thing is here, we don't have to remember everything. If I go to where it says scan, think search, and if I went to, let's say, buy industry, here are the list of sectors. If I went to energy and said, what type of industry groups are in the energy sector? La la, there they are. Now, historically, we saw coal in there. We don't see it right now because a lot of those coal stocks didn't make it. Oh, gosh, I don't even want to go back to that. That was very interesting probably 15 years ago, but right now, not so much. But really, you only got really energy equipment and the oil and gas fuels themselves, okay? Now, what I want to do is I want to go back into this. Let's say I don't know anything about energy stocks. I don't know any stocks that are in there. Don't worry. Go to Market Watch. We're going to go right to Visualize for just a second. Now, we know that when we go to Market Watch, Visualize, probably if we said the easier route, maybe less could be more. We're going to go to the S&P 100. We go to the S&P 100. All of a sudden, we're looking really for, survey says, the energy names. Now, what you're now going to notice is here's the square. Now, if you said to yourself, well, geez, that's not really that many energy stocks. Well, that's why people look at the S&P 500, okay? However, if you want a smaller list, concentration, we could actually go just right here to the left-hand side, click on the S&P 100, click on the energy. And so this tells us in the S&P 100 there's 3 stocks. Now, the question is Exxon going up? Is Chevron going up? Is ConocoPhillips actually going up? Now, could we do the same thing in the S&P 500 and just get a bigger list? Hit it, S&P 500, go to the energy. And then there is a bigger list of stocks. Now, there's a couple of these like FANG, a couple of these names that have actually had a pretty good push. Okay, now let's kind of start. I want to kind of take a look at a moment just real quick at Exxon and Chevron for just a moment. And then what we're going to do is we're going to come back a little bit to the area of financials. Financials, they were not weak today, okay? Now, what I want to do for just a moment, let's take a look at this. Okay, so notice how it wasn't really that hard to find it, right? As far as the areas where there might be some potential setups. Now, over the next couple of days, some technicians would want to see this take out the 946, make a higher high. Then that investor might say, well, now we're too high. We don't fall for that stuff. Historically, yes, but a higher high is it's a confirmation of an upward trend or a breakout of a sideways range. Now let me go to FANG for just a moment. Now, if we look at FANG just real quick, it kind of has, the reason why I kind of looked at this, it kind of has this little up motion, down motion. This might be what technicians call you trade stocks like this, okay? Now, everyone's a little different because when I show you a stock, maybe like Chevron, you might say it's gone up too much. Some investors might like these range-bound stocks. This is why I want to point it up, and this class is about trading. Now, I'm not going to talk about swing trading. Michael Fairborn does. I'm going to go to one that has a little bit more of a trend with it. And if you look at, let's say, Exxon, this kind of looks more like the neighborhood itself. Now, I'm not the best at drawing patterns, okay? But this very much kind of looks like it kind of has a little down move, a little run up, a little down move, run back to the upside, down move again, run back to the upside. Now, I don't know what technicians call that. Maybe I do. But this kind of looks like it might be trying to break itself out. Now, here's what I want to kind of show. Let's say the investor said, look, I want to take a half of a position, meaning if they normally buy $5,000 worth of stock, they might do $2,500, okay? And what we're going to do is we're going to try to buy a half position of whatever we buy, and we're going to try to buy some now, and if it actually makes like a higher low, again, try to buy the remaining position. I want us to practice that. Because when we're in kind of choppier market conditions, splitting up the position size, a lot of investors try to do that. Dollar cost averaging. Now, what I'm going to do for just a second is I'm going to pull this up in the paper money account. We're going to go to just real quick. Let's go to charts. We're going to go just real quick to ExxonMobil. If I pull this up, what I'm now going to do is I'm going to right click on the chart. And now what I'm going to do is going to go buy custom, and I'm going to go with OCO bracket, okay? Now, if we did with OCO bracket, that means we're buying it, we're setting a target and a stop. Now, let's say example given that we normally buy $7,000 worth of stock, hypothetically. We're going to come back in and say, look, 3,500, okay? And what we're going to do is say, well, how many, if we did 3,500, how many shares would that be? Well, it'd be 30 shares, okay? So what we're now going to look at is we're just going to take that dollar off, say we're going to buy 30 shares, okay? Now, if that stock breaks out, the investor might add to the position. If the stock breaks out and pulls back, they might add to the position. The real thing that you're doing is you're just adding again when you see another entry setup. Really not that bad, okay? Now, if we said, well, what about the stop? I'd like to kind of ask this question. Where was the last higher low on the chart? How can we easily see the last higher low? It is easy, okay? Because we've gone over that quite a bit, and I've had little daydreams of it, okay? The way we see really higher lows is you just circle the red and green candles side by side. The red candle signifies where we pull back down to, and the green candles signifies where we started to bounce up from, hence higher low. Now, if we take a look at this, I'm going to draw a line right at the open of that green candle, right there. Now, what I'm going to do is we're going to set that stop right below there. Let me kind of write this down so you see exactly where we're going. I'm going to take 112.15 less 0.98, and it's going to give us, what do we got? It's going to give us 109.90, and I'm going to put that right there, 109.90. That's going to be the stop, okay? So there she is. So if we take out this higher low and we go down to 109.90, which is probably about right there, it's going to get stopped out, okay? It's a trigger to sell. So we're going to put that stop right there, 109.90, 109.90, stop day GTC. There it is. All right, now, what we're going to do in this case is, what about the target? Okay. Thank you, Connie, for answering that. Now, if we take a look at this, if we went back to like the target, we actually have a target above us at 119, a little higher than that if we kind of said what might be the next level if it got to there. Okay. Now what you're going to see is about 121, and anything above that, we got right about 125. Now, if you're cutting, let's say, the interest rate, you're trying to really spur the what? What is the Fed trying to do? They're trying to spur the economy. Okay, they're trying to make the where businesses, consumers spend, right? And if that's what happens, they feel more comfortable, they might use more fuel, right? So maybe this kind of plays right in line with what happened today. Now, what I'm going to do is I'm going to put that target right about 121. We're not saying that's the only way. We don't know if it's going to go there. We're not saying it can't go higher than that. I'm just going to put on that target initially. Now, if you get that energy space to break out, we know the Exxon and Chevron are the biggest two stocks in that space. We know that. We can see that on the Market Watch right here on that. Go to Visualize, Market Watch. And we know that when I pull up, let's say, the S&P 500, there it is, pull that up, energy, the bigger the square or rectangle, okay, the bigger the market cap. So these two stocks are the behemoths of the space. Now, I just want to kind of get to this. We're going to go data GTC. There it is. What I'm now going to do is going to go confirm and send. I am going to put that right in the margin account. And I'm going to go plus 30 there. I don't know why that took to that. Okay, there it is. And so we're going to do it in the margin account, 30 shares, send the order. Now, if we do that, remember, the stop is not valid until the stock is purchased, and the target is not valid until the stock is purchased. Wonder if it goes down $1 tomorrow. Who cares? Wonder if it goes up $1 tomorrow. Who cares? Just because the investor buys it, it doesn't mean it's not going to fluctuate, okay? It's moving around, okay? And that's what we're trying to say. Look, if it gets below the support, now it's not just moving around. It could be changing direction, okay? Now, any questions? Well, now I want to kind of show this. If we also look at Chevron, I'm not going to kind of go there per se, maybe take a look at it tomorrow, but Chevron has really been a stock that's kind of just been kind of grinding away to the upside, if you will, just kind of making some higher lows. Now, the reason I'm kind of pointing these out is whenever we talk about, let's say, technology stocks, discretionary stocks, well, some investors might like that. But other investors might say, well, James, I don't really want to trade something that is maybe that volatile. Some investors kind of want maybe more businesses that are like monopolies, oligopolies, if you will, that kind of might have a dividend, right? Something that pays a dividend. And also maybe something that could raise the dividend or cut at any time. The investor does not know. But if we look at this, I mean, that yield of Chevron is 4.27% quarterly basis. They also might like something where the PE is not high per se. PE is 20, okay? And so it's not really trading at a high multiple of the trailing earnings, okay? So I think it is something to kind of keep an eye on. We're giving the example of Exxon, but one that an investor might watch also is with that Chevron. Highly correlated, okay? Not perfect, but highly correlated, okay? Any questions? Now, if we, now the comment really from was, what does it mean to economy when energy is up? Well, I think, you know, if we go back and say if energy is up, okay, that's actually because, number one, the economies around the world, us included, could be consuming it, okay? You go back to 2007 when oil went to $147 a barrel. Many economies were really growing a lot. There's a risk, though, that when the energy sector is that high, that it could actually, you know, really start to actually do hurt to consumers that are paying $5, $7 for a gallon of gas, which we saw, okay? So the thing is, you like kind of energy to be up, but kind of grinding higher, not like crashing higher, okay? Because if you got energy, if you got oil going to like 100 plus, 100 and a quarter, 150, things like that, and I'm even talking about nominal, just even matching what it did back in 07, okay? That's not necessarily a good sign, okay? So if we went back and took a look at this, I'm going to also go back to this space right here, IXM. Now, one of the areas, if we went back to this, and let's kind of pull this up. So let's kind of just take a look at where the market is, okay? So what did we say? The Fed already gave an expectation that they were going to cut a quarter point. They did. 2, the Fed's Jerome Powell, he stopped talking, okay? Now, remember, when the Fed Jerome Powell is talking and people ask questions, people sometimes get a little nervous, okay? Now it becomes more interesting in the last hour of trading. How does the market settle, okay? Now, just quickly before we look at the next one, if we kind of said, well, where's the market now? Well, I mean, look, we're not at the 462, the high, but if we hold today, which sometimes is just a victory by itself, this would actually be a brand new close above the high of the low day again. Now, again, let's just kind of back this off for just a second. If we said on a percentage basis, what was the fluctuation from top to bottom? The answer, 1.24%. We can't say words like crash, okay? If you told someone, man, it crashed 1.24%, they would look at you like, I don't catch what you're meaning, okay? So we would not say that. If we actually pulled up the S&P, it's actually trying to fire back. Now, we know in candle class, if you're closing closer to the high, better. Now, do we like the intraday price action to the downside? Of course not. But you got to expect on earnings, maybe, or Fed release, or major data point like non-farm payrolls, it's going to be more volatile. So I don't think we're seeing anything different than we would normally expect. Now, when you look at the Russell and say, where is it? It is also trying to actually make a close above the high of the low day with 34 minutes remaining in the market. And the NASDAQ, where are you? Okay. The NASDAQ, after selling off a little bit, okay, you're seeing that we're closing, if we close here, this second, we're closing closer to the high. So there was some intra-news volatility, but even if you looked at that from top to bottom, it was 1.16. I can't really say it's crashing. I guess if you zoomed in 10 times, it looked like it did. Okay, now let's get a hold of ourselves. Now, so this is kind of where you want to kind of be watching the trend, not what's happening on the 1 minute chart, okay? Totally gives you kind of a different feel. Now, let's go back to this just real quick. I want to bring up just fast, if you look at communications, okay? Communications is trying to really make another higher low. Now, remember what we just said. How can you see the higher lows? Simple. You actually circle the red and green candle. Circle the red and green candle. Circle the red and green candle. Don't ask why, circle it, okay? And what you're going to notice is when you see that, you're going to kind of notice a process of really higher lows. Now, again, we've been brainwashed that, oh, we can get a pullback, you need a deeper pullback. Who says? Not if you have momentum, okay? Now, what you're going to now notice is that communication space, that doesn't look that weak. We only went down for 1 day, 1 day. Intraday actually matched yesterday. And if we close here, that would be a brand new close above the high of the low day. So we got to look at that for just a moment. But I also want to go back to this chart right here, the IXM. So let's spend the rest of the time, 20 minutes or so, really on those two sectors. We talk about energy. Second, we're actually going to bring up the IXM first, then communication. Now, if we pull these up for just a second, pull this up. Now, like the Dow, you did see the IXM make a brand new high here today. Now, let's count those candles together. 1, 2, okay, 3. Now, if you zoom in and you say, look, after the 1, 2, 3 goes down, and then all of a sudden you get a bullish engulfing, a piercing line, probably bullish engulfing better, that actually turns into be close above the high of the low day, hence the green dot. It's not a bad sign. Okay, now, what are some of those stocks in the financials? Now, let's just kind of cut the mustard here. We don't have to be a professional searcher. We can get to it quick. If I went and said, give me market watch, I'll start with the S&P 100 first, okay? If I said, look, click on that right there, that space, here's an immediate watch list. Immediate. Now, some of those stocks we know are also in the Dow Jones. I mean, they look familiar, don't they? Now, what I want to do for just a moment is I want to come back to a couple stocks that might be getting a little breakout. Now, if I pull this up for just a second, okay? Now, a couple of these are green. That one, V, MA, okay, USB, AXP, etc. those are probably going to be the ones that have a better chance of maybe getting a bounce and or a breakout. Now, I want to come back to just real quick. We can look at, we'll look at those, but I'm also going to kind of point this out, the C example and the WFC. For just a moment, let's just kind of fast fire through a couple of these. Does that look bearish to you? Well, my friend said it was down a quarter on that short-term chart. Your friend doesn't know how to read the trend, okay? If my friend said that, I'd say the same thing to him too, okay? So be very careful about looking at these intraday charts where you're not looking at the daily charts and you ain't looking at the weekly charts. Be very careful. You can fake yourself out. That's no fun. Now, if you take a look at the WFC, what you're now going to notice in the WFC, getting a little bounce inside the channel, not as high as C, but getting a little bounce there. You type in BAC, you're going to see what do we see in BAC. Now, I'm going to ask you a question. Is that a moving average crossover? Is that, for example, closed above the high of the low day? Just take a yes or no. Okay. Now, whenever the investor takes an entry, they cannot see beyond the right-hand side. Now, some investors get that, and other investors, it takes them a little bit, okay? So the thing is, that's why they set a position size. They have a position size. Second, they also set a stop. They also might have maybe allocation limits to the same areas. So if someone said, look, I bought GS, JPM, BAC, C, they're all different ticker symbols, and therefore I diversified. No, you allocated to the same area, and they all have high correlation. Okay, now here's what we're going to do. We're going to do a smaller dollar one because not everyone's going to do $300 examples. Let's say the investor says, look, we're going to right click on that chart, and let me actually just bring this up for just a sec. BAC, okay? And what I'm now going to do, now here's the kind of the funny thing. Tell me if you know anyone like this. Yeah, you know, if I was looking right, this is where I would have gotten in. If I could have seen that, that's where I would have gotten in. Or if I could have seen that crossover, yes, that's absolutely, I would have been on that. Or if I actually had that step 3, this is exactly where the investor would have got it. That's where I would have got it for sure. Okay, put me down. But now all of a sudden that moving average shows 1, and then we see the 2 and 3 at the same time. All of a sudden it feels different because we're talking about potentially now, okay? So what we're going to do is, again, we're going to kind of say what is the capital size of the investor might be willing to take. Let's go back to just real quick. We're going to right click on the chart, buy custom. We're going to go with OCO bracket. Now, does everything have to have a target? Not necessarily. You go back to the 3-year weekly chart, pull this up for just a moment. We don't really see anything on the chart, at least I don't, that might give us maybe we don't have any prior high, at least on this chart. Can anyone think of any tool that the technician might use? The answer is always Fibonacci. Fibonacci something, retracement, fans, extensions, who knows? Now, if we take a look at this, we do see we had like an old area of resistance right here. All right. Now, and then what it did is it went down, and it went down pretty good. Okay. Now, if we take a look at that, we kind of see that if we take a look at this, the 100 really, the 100 represents resistance. Okay. The 161.8, that's being the fib extension, that's really the target that probably most likely the technician would probably pick as an example target. The 131 is just kind of where some people say, look, James, I'm just kind of trying to play halfway to that extension target. We don't always do the same things, do we? So some people say, James, if I get a breakout, obviously the higher up this really goes, it becomes less probable. Understood. So that's why I kind of put that there. Some investors say, James, if it went up half that, that's their target, okay? Now, what I'm going to do is I'm going to put a target right at 56. And now, by the way, you might be saying, well, how do you change that? You draw Fibonacci's anywhere on the chart, right-click on the red lines, and go edit properties. Yours might say like a number like 261.8. You can just take the coefficients out. The slope coefficients, as Pia knows, they're not just coefficients, they're slope coefficients. All right. And then what you're now going to see is the 423, which we don't really bring in. But if I don't want the 423, I can just put the 261.8 back. Okay. So those are not set in stone. You could actually change those to what you want. So now what we see up on the chart is the 161 and the 261. And that 261 really becomes something like, how probable is that? If you ask me, what some people like more than the 261 is really the 200. Now, the 200 is really just the channel breakout, okay? So that kind of becomes like more probable because all it's doing is it's going from here down to there, and it's taking the width and you're just adding on top. And this is not new. It just, you're repeating the pattern, okay? And so if someone said, look, I'm going to go for the 161, more probable, doesn't mean it's going to hit it, 56. If someone says, look, I think this sector could move, they might be looking for a deeper target, okay? Now, for our example, I'm going to put $56. Okay, example given. Yeah, that slope coefficient, that just really, for some of you that like math, you just love that. It's funny. Now, what we're going to do is we're going to right click, buy custom with OCO bracket. And I got to bring up that, let's see, there it is. And somebody delete that, right click, buy custom with OCO bracket. There it is. Now, what I'm going to do is let's pull this back up there, okay? We're going to put that target there at about $56. Now, we're going to put it at $56 flat, okay? Now, you might say, I'm going to do it a little less, a little bit more. I'm going to show the example of $56, okay? Now, if we take a look at this, let's say the stop, just like the question we had from before, where is the higher low? Well, that higher low on that chart is really again, just simple. We're going to circle the red and green candle side by side. When we talk about the higher low, we like to draw the candle we like to draw that line from the open of the green candle. Go back. We like to draw the open from the green candle. We draw the line from the open of the green candle. Some might say, nah, I'm going to take that low of that day. Those are the two markers. Not dramatically different, but a little different. We're going to take, let's say, 49. I'll even give it a little bit more room. If you say, James, I like a little looser stop, we'll take 48.84 to show you kind of that little variance. Less, not 2%, 3%, because we're less than $50. And now if you take a look at this, we go less 3%, excuse me. There it is, 47.37. So now we type in 47.37, dated GTC, dated GTC, okay? Now, for time's sake, we'll keep it at the 100 shares. I don't think that's really actually a problem in terms of position sizing anyway. And when we actually take a look at just real quick on the fundamental point of view, kind of see where it's actually been on an annual basis. Now, remember, these numbers are not looking forward. They're just showing us a trend of data, okay? So when we look at, let's say, the sales per share, they actually have been kind of moving up over time. Now, some people look at this and say, well, this is lagging, okay? Well, so is price to some degree. You could say trend is lagging. Volume, when you look at volume, it's not necessarily always showing today, it's showing you historical as well. But if you kind of want something actually closer, okay, we could actually go to quarterly and see something a little bit closer. True. When you look at these numbers, really outside 21, these numbers have really been, for the most part, 20, 21 and 22 a little softer, okay? Well, softer in 22. Little softer there, but 21 kind of getting a little back. If we look at the quarterly numbers, you're going to see that these quarterly 90 cents and 89. Now, if we look at those and kind of see where they really are, if they did what they did in the last two quarters, hypothetically again, you'd really be right around 360. Now, that's if they did it. We're not saying they are. Now, if you take a quick look at this, we're going to go back to that chart. We're going to go confirm and send. And now what we're going to go ahead and do is send the order. Okay? Yes, Pia is. I agree with that. Lisa, you're totally right. Now, let's kind of go back to something for just a sec. Now, did I miss any stocks in that space? Speak now, forever hold your peace. Okay? Now, the one that we kind of want to kind of bring up for just a second, okay? The one that's in the Dow, that's getting a little push is really AXP. Now, I don't know why every chart looks like this. You ever notice, like, maybe you buy a car, right? And then you realize after you buy a car that everyone is driving that car. Sometimes when you see this on the chart, you say, look, I see a W, I see a V. Everything looks like that. It's kind of similar in this case. My point is, this kind of looks like a V. And then it kind of ran to the upside and then took a stall, ran to the upside, pulled back. So really on this chart, really, here's like one V. Here's like another V, right? These areas right there, double bottom, okay? And then you're getting above this area of resistance. And if you really go back and really take a look at that, you really only had 2 weeks of a little consolidation. And then what do we see again? Doink, close above the high, the low, weak, okay? Now we're pulling this up on the weekly chart. Show us the daily chart. We pull up, let's say, the daily chart. What we're now going to see on this is what it looks like. Now, if the chart is not showing anything, the technician with experience doesn't feel any pressure. Now, but if the chart is really showing maybe some bullish potential setups, they might say, you know what? I might be willing to trade the chart if they're kind of following their rule set. Now, remember, if we went back and kind of looked at this, we go back and kind of say, where was uno? Okay. And if we look at, let's say, where was dos? Okay, right there. And if you kind of look at today, this is really being tres, or 3. Okay. Now, if you take a quick look at this, I don't know about you, but that kind of gap to the upside, if it did intraday go down, it didn't go down by much, or if it did, it bounced back. The open was pretty much the low. Now, I know what you're thinking. Let's hit the LJ top, the 337.50. We're not there. We're only $1.47 off. Okay, glass half empty or half full. It looks half full. And we're kind of wondering, could this continue? Now, some investors, they kind of like to look for flags, or as we said last week, fleags, if we're Canadian, and we love all people. Literally, we mean that. And if we take a look at this, we see like an area of resistance again, okay? Well, when we kind of see these kind of double peaks spread out like that, this is your classic Fibonacci extension example, okay? Now, what I'm going to do in this case, I'm going to right-click on this chart, buy custom. We're going to show the example of going with OCO bracket. So trade number 3 here, what we're going to do. Now, remember, this is a bigger dollar stock. Noted, just for kind of like trading to a typical position size, let's say we did 10 shares. Now, what we're going to do in this case is we're going to use today's open price as maybe a support area number 1. Think of that as like if it went down to that level and got lower, the investor's saying, look, I want to get out. The bounce isn't holding. The moving average cross isn't holding. A secondary area that will kind of mark the investor can choose for themselves is that 324.45. Now, if we took 324.45 less 2%, that's going to really give us 317.96. Now, we pull this up, 317.96. Dated GTC. Now, remember, the stop is not valid until the stock is purchased. The stock is purchased. It's a trigger to sell, okay? Now, when we go back to analyze just real quick, look at fundamentals, kind of see a path in which the company has been on. Really over the last 5 years, not completely surprising. It's really the highest it's been over the last 5 years. If we're talking about the full fiscal year 24, you're actually going to see, if you look at these numbers down here, sales per share really getting a little decent push. Now, remember, if you want a little insight of what's kind of happened more recently, okay, go to quarterly. Now, this is also where you can kind of maybe see if the business is cyclical. Are all the quarters similar, or are they do they vacillate a little bit, okay? Like Christmas sales, things like that. Don't really see any massive changing per se. It's all about $3 or $4. Now, what I'm going to do is I'm going to put that target here, and I got to do this fast because we're up against it. I'm going to put this right here, and now what you're going to see is if we kind of put it. Now, remember, there's the 131, which is halfway to the 161. And if we did the 161, we're going to put it right at 349. Now, some of you might be thinking, where might an investor, hypothetically named Bill, set their target? If they think Bill's going to put it at 349.98, they might try to undercut that investor, technically speaking, at 349. They want to try to sell before maybe that other investor where their target might be. Interesting thought. And now what we're going to do is set that stop right there. So we got to wrap it up. Here's what I want you to do. I want you to actually take a look in paper money in the communication sector. I want you to keep an eye on energy stocks and also the financial sector as well. Now, we kind of also talked about what happens on, let's say, a day like today, and kind of what is maybe some stocks that have really kind of held up quite well, given the announcement and also maybe the forecast going forward. Now, I'm out of my time here. If you'd like to learn more about, let's say, what we discussed today, feel free to actually follow us right on YouTube, right on Trader Talks. Subscribe for free. Second, we have Michael Fairborn coming up right at the top of the hour. He'll talk more about markets and sectors right at the top of the hour to kind of give another way to look at it. We thank Connie for answering those questions in chat, and all of you as well. And with that said, remember with what we discussed, all investing involves risk. And remember that our examples were in paper money, and we'll practice and follow through with those. Thanks so much for attending today's class on trading growth and value. Most of our examples were more probably growth here today. With that said, have a great day. Stay tuned for Mike Fairborn coming up next. Bye-bye.